Thanks a lot, Brian, and thanks all for coming out here. And as Brian mentioned, it's funny, we've only been around for 1 year, and our founder and chairman, Keith Neumeyer, he's founded $2 billion companies. And the common denominator between these two other companies he's founded, First Quantum Minerals and First Majestic Silver, is that he founded those two companies at the bottom of severe bear markets. And that's exactly the same thing we did, where, just over a year ago, I got hired in January 2015, and the capital markets with respect to mining equities was just a disaster. Gold, everybody thought gold was going to go below $1,000. The juniors are getting hammered, and Keith came out to me and said, listen, I'm putting together this mineral bank concept. And so we got this thing going. We got listed in April of 2015. We barely got our financing over the line. We raised $5 million, and since that time, we've gone from 0 ounces to over 10.5 million ounces of gold in the ground. We've made 6 acquisitions. We just announced another one last week. I got another one lined up, and we're coming out of the woods. But that being said, there's incredible opportunities out there. Here's a forward-looking statement. Please take a look at that. I will be making some forward-looking statements. My background is I'm a geologist, but I'm also a former mining analyst. And one thing I learned when I was a mining analyst, when I'm looking at mining equities, is people. And I quite honestly think there's very, very few people who've had incredible success. And Brian mentioned a few names there. There's a few other names here I recognize who've had some incredible success. But when Keith Neumeyer asked me to come aboard, I said, when? When can I come aboard? Because Keith, he's one of these guys. I put him in the same companies, a Lucas Lundin, a Ross Beatty, and some of these other people who've taken something out of nothing and created billion-dollar companies. Keith founded First Quantum. Keith founded First Majestic. And I truly don't think lightning strikes twice. First Majestic is now over a $2 billion market cap company. And so when we started this company, again, it was the bottom of the bear market. Chris Osterman's our CEO. He's a PhD in geology. He's also a mining engineer. He was actually originally a mining engineer before he became a geologist. Usually it's the other way around, so I find that a little bit strange. But that being said, Chris handles a lot of our technical due diligence, and he's a very good geologist. My background, I'm a geologist, but I'm also a former analyst in Toronto, and I've been in this business for about 20 years now. My father was a miner, so I know a little bit about this industry, and I know when there's a bottom, and the only problem is how long do these bottoms last for. So what is the strategy of First Mining Finance? It's simply, to go out and take advantage of the recent bear market. I still think we're just starting to come out of this bear market, but that being said, the junior mine equities right now are still incredibly cheap. Yes, they've come off the bottoms, but they still have a long ways to go. So we're going out there, we're being very aggressive. We're buying assets that have had tens of millions of dollars put into them. For example, we acquired a company called Gold Canyon last year. We paid $55 million for that. It had well over $70 million in drilling put into the ground. So again, the market was so broken. Let me put it this way, when I was a geologist, if you gave me $10 million, I'll drill you 1 million ounces of gold. Now, even still now, I think I can get you still 1 million ounces for less than that by buying the ounces instead of drilling for it. So, I still think there's opportunities out there, but we're going out, we're buying these undervalued assets, we're putting them into our portfolio. We're not explorers, we're not developers, we're a mineral bank. We're going out, we're taking out these companies, and we put them into our portfolio. Longer term, right now, if we truly are in a new cycle, it's still early days, but as we go into the cycle, as valuations go up, and as this market sentiment continues to improve, what we'll do is we'll unlock value by entering into agreements with third parties that'll take these assets we have and they'll move them forward, but we'll hold on to residual interest, either in a joint venture, a royalty, a stream, minority interest, or some combination of the above. And ultimately, it will be a company holding streams and royalties and joint ventures and eventually produce revenue for our shareholders. So it's funny, we've seen, the markets in the last couple of months have looked pretty good. They seem to be coming out of the doldrums. We still have a long ways to go compared to where we were a couple of years ago, and even compared to historical highs. So there's still tremendous upside. There's still opportunities out there. The other thing I'll note, equities are going up, but one thing that's different this time is I was talking to a salesman in Europe for a large bank, and he said, yeah, sure, the valuations have gone up. Yeah, there's more liquidity coming back. But a lot of the buy-side funds have way more risk criteria nowadays. They are still restricted in where they can put their capital. So yeah, sure, these valuations, these juniors have gone up, but it's still very difficult for them to raise capital. And when the reality comes in that they can't raise capital, they will come back to us and start doing deals. So again, the opportunities are still out there. Yeah, things are getting better. As Brian had mentioned, yeah, there's a 70% chance we could see a correction, and we'll take advantage of that if that happens. So when we look at assets, we put in quite a bit of due diligence. So obviously the quality of the asset, grade, size, metallurgy, strip ratio, expiration upside, all those things we look at. Jurisdiction is very important. Our focus is on the Americas. Our acquisitions so far have been in Eastern Canada. We like Ontario a lot, Newfoundland, Quebec, Manitoba. The only places in the United States we like is Nevada, Arizona. We still like Mexico. Specifically, we really like Sonora, and we do like Latin America. Infrastructure is critical. We won't go anywhere where there's no infrastructure. I've done it before. It's very, very challenging. Land tenure, First Nations, ejidos, those are issues you really have to look at, and these issues will become even more critical as we go forward. Holding costs, does the project need assessment work? Are there forward royalties you have to pay? All those other things. And most importantly, valuation. So far, we've been very disciplined. We've been able to make all our acquisitions at less than $10 an ounce in the ground of gold. I think that's starting to get a little bit more difficult now, but that being said, we're still seeing some interesting opportunities out there. So again, we've been very, very aggressive. When we started a year ago, we were telling people we're going to be aggressive. We were telling people we're going to do deals, and everyone started laughing at us. Well, since that time, we've gone out and we've made over 6 acquisitions. We're on our 7th now, buying the Cameron project. We've gone from 0 ounces of gold to over 10.5 million ounces. We're probably going to have more news next week on another acquisition. So again, one thing about Keith, when he says he's going to do something, we do it, and we move fast, and we're very, very aggressive. And as I mentioned, I was here a year ago. Our first acquisition, Coastal Gold. We tried to do a deal with them. They said no. So what we did? We got our lawyers. We went to court. And we said, you're going to do a deal with us, or we're taking you down. We took them down, and we got the deal done. And we added about 1 million ounces of gold. So again, we move fast, we move hard, and we like to make a lot of noise, and we're not afraid to do that. Again, we've gone from 0 ounces to over 10 million ounces of gold. The other thing I want to highlight is we're not buying ounces of gold that need $2,000 gold. They don't need $1,500 gold. When we look at assets, we look at assets that would make money at current spot metal prices. So for gold, we were using $1,200 gold. So these are assets that are not out of money. That's how broken the market was. You can go out there and buy assets that would actually, if they were put in production today, they would make money. That's how broken the market was. And we will continue to make those kind of acquisitions. Again, we've grown this company. When we started out, we had a market cap of about 30 million. That was about a year ago. Now we're almost $300 million market cap. So we've gone, we started this company a year ago where we barely got this financing done. We barely raised $5 million. I thought I was going to have the pound of pavement again looking for work, and we've grown this thing. Our share price, we did our initial financing a year ago at 40 cents. Now we're trading around 80 cents. So again, Keith knows how to build companies. He's also been putting, whenever the shares come under pressure, Keith starts hitting the button, he starts buying shares. He owns almost 10 million shares. So he always supports his companies. He always supports his shareholders. He always supports the share price and puts his own money into the companies. Again, we're buying assets for less than $10 an ounce, but when they're in our hands, the market values them well over $20 an ounce. So again, it's almost like an arbitrage opportunity where we're buying these undervalued ounces. When they're in our hands, they get a lift. So again, it's a great opportunity for us, it's a great opportunity for our shareholders, and we will continue to make these acquisitions. Yes, it's getting harder. I mean, I can't guarantee that we'll be able to keep doing these kind of deals less than $10 an ounce. But even if they're below $15 or $20 an ounce, that's still a good deal, because in a normal bull market, a lot of these assets we have would be trading well over 100. An extreme example would be, I'll mention, Kaminak. Everybody's talking about Kaminak. Well, they paid about $100 an ounce. I mean, I'm not saying these assets are Kaminak. Okay, let's say they're $50 an ounce. And again, we're buying them for less than 10, and we're being valued at 20. So again, there's a ways to go in this market, and we're going to take advantage of it. We've now been building out this portfolio. You know, I would describe First Mining Finance almost as an ETF. We have a broad portfolio of assets, various jurisdictions, various stages of development in Canada, the United States, and Mexico. So, you know, if you're trying to decide whether to buy a basket of equities, don't bother, just buy us, because we're almost like an ETF. I almost call us private equity for the little guy, and that's another way to look at it. Again, you know, whenever we do these deals, we use our shares, and one thing people say is, aren't you diluting yourself when you're buying these companies with your shares? No, because if you're adding ounces, accretive ounces, then these deals are accretive to our shareholders. You know, we've taken about 400% dilution, and yet our number of ounces per share has gone up by over 1,000%. So what is so going forward, how we unlock value? Again, as I mentioned before, when we're further along into the cycle, we'll do joint ventures, earnings, equity positions of partners, royalties, streaming structures, and spin-outs. Here's our corporate overview. We got 12 million in cash. We have over 366 million shares outstanding. We have tremendous liquidity. We trade, you know, over 1 million shares a day, some days over 6 million. We can handle it. We're very aggressive in the market, and we're always on the road. So again, the summary: proven management team, Keith Neumeyer. We've been, we've made a lot of acquisitions. Been very busy this year. 27 assets. I don't know anybody who's been as aggressive as we have. You know, we've taken out, 5 companies. We just announced the 6th one, and I'll probably have news on the 7th one next week. And we're going to continue to use our shares and go forward and continue to buy assets, given that the opportunity is out there. And when the markets get stronger, we get further into the cycle, we will unlock value. I'll leave it at that. Thank you for your time.